What's up, everyone? Give us a couple of minutes. About to start. What a start of the week with Chinese AI causing all the panic, all the ruckus in the in the markets, with the Nasdaq down at some point of over 5%. We're about to cash market is about to start in 33 minutes. So, all right, just getting settled in. Give me a couple more minutes. If you have any questions, you can always use the chat. Pardon me. All right, I'm watching. Let's see, live. Content. Give me a sec, boys. Almost done. Need to finish the setup. There we go. Okay. Mute myself on the live. That way I can. What's up, guys? All right. What a start of the week. Let's give it another few minutes. I start at 9 a.m. It's 8:59. Clean this stuff up. Meanwhile, goddamn, what a wonderful start. All right, so this is the one more minute. All right, let's rock and roll, boys and girls, I suppose, right? Everybody's politically correct. Alrighty, so I'll just turn this off, show you what happened overnight. So the futures, they opened up with a gap down because the Chinese have essentially outpaced United States with the AI deep sum shit, whatever it's called. You can Google, find it in the news. Well, actually, let's do it together. Right, so the name was, there we go. What the hell was the name of this deep bullshit? Anyway, the point being is, because the Chinese basically outdid OpenAI's ChatGPT using a lot worse hardware, slower hardware, but they optimized the shit out of it because they have smarter engineers. So they basically their model, their AI model, works better than OpenAI's model and the rest of the United States products at fraction of the cost because they're running lower hardware, less hardware, just more optimized. So United States is essentially thrown, and pretty much all the Nasdaq has been running on is for the last quantum computing, AI. It was the theme of last year, pretty much. Okay, one of the major themes. So this kind of spooked the markets that all of a sudden Chinese come to the table with something so powerful that again costs a fraction of what the United States spends on it and provides better service. Okay, so and it's also free. It's open source. So with all that's well, that's AI. Yeah. So the AI is one of the. Somebody asked Do you see any sectors or industries poised for significant movement? Well, we're getting a significant movement right now. Everything that's so, for example, Siemens, the your big European, it tanked today because again, everything that's energy efficient or anything to do with AI, so computer chips, this that, Nvidia was down like 10% pre-market, I think, which is a pretty. We can take a look. Obviously, let's take a look at Nvidia. We're gonna open in 30 minutes. Let's see futures. Nope. So yeah, we've gapped down nicely with Nvidia because it's obviously being affected. So the AI computer models or machine learning is running on Nvidia GPUs, and this is why Nvidia has been basically darling stock. It shut up and created millionaires out of people who work there. Regular rank file engineers are all millionaires because it went from 20 whatever $10 2 years ago to $150, $140. Okay, because but when United States put embargo on exports to China and other unfriendly states to keep their AI advantage, Chinese were forced to utilize worse technology, and they because they have so many engineers and obviously they figured out the way to that they don't need that of an amazing hardware when they can optimize uh, when they can optimize worse hardware but in a smarter way, right? So the DeepSeek is the AI, and it's completely creating the shitstorm in the markets right now. So it's going to be a first test for Trump as well. So markets will cry ouchie ouchie a little bit, and Trump will force Fed's hand to cut the rates. So when is this going to bleed going to stop? I don't know. Let's draw some fibs and see where we at. So this is definitely a good area, a value area, a little lower within Qs, within Nasdaq. Shit, this is Nvidia. Sorry, but still, same deal. They're running parallel. So see, it's the same structure. So we had a nice breakout, retest, continuation, and obviously due to the news, this is the open. Okay, can remove this now. But so far, buyers are stepping in, and this is the heat map, book map, and one sec, and I'm monitoring the cumulative volume delta, basically who's dominating the market. And so far, we have buyers stepping in after in early U.S. session in the futures market. When was this? This is like 7:30 ish. We bottomed and started rallying. So buyers are stepping in because we essentially, we were down 5. We were down 5 something percent. So bottom pickers stepped in to buy some, which makes sense. Okay. So now let's see if this low holds today or not. So far, there is a little attempt at the bounce back up. We're from the 786 fib. Okay, last leg up. And the volume is still supporting this notion, even though we're kind of dipping now. So when this thing is going to start rolling over, and I might close my longs from bottom here. But for now, I'm still sitting in them. One second, let me see. Because we did have a turnaround. So how do I notice the turnaround? Well, very simple. Let's dive in. 1 second. These large circles, by the way, these are huge orders, and so when these are buys, this is sells, right? So stop loss is still. All right, so we bottomed at this wick right here, as you can see. Zoom in a little. A nice candle. This was still negative, but then we started going into positive territory, a little by little, and we essentially produced a small V-shape recovery right now. Right now, before the cash market open, we're just flat. Makes sense because right now this is the first attempt at this is the first real bounce since the gap opened down. Okay, so Sunday open, we gap down. Usually gaps get closed, but we'll see. So this thing might have a V-shaped recovery because again, all these news on the Chinese with their software, optimized AI, blah 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 blah. I think the markets are overdoing it. So this is just to spook the markets and a lot of FUD. So I'm not buying all this narrative just yet. I think it's a whole lot of horseshit. But markets are overextended. Obviously, they've been overextended for a while, overbought. So Trump is coming in his new presidency, where essentially it's hard to drive markets up even further because you're going to create inflation, and that's going to hurt his constituency. Basically, if you're going to start cutting rates even further, markets will rally, which will help a guy like me, but it will not help most people because the food prices and once the inflation comes back in, it's hard to contain it, right? So they'll have to raise the rates again. So what's the point of flip-flopping? So that's why the Fed is kind of keeping a lid on cutting any further. But Trump wants them to cut further, and we've discussed it last week. And he actually came on the wires the next day and said the same thing after I explained why he would want to do something like that. Anyway, so also these book maps are nice, just as a FYI, of these orange areas. These are where all the big orders reside. So when we take this level, for example, it's going to be probably going to see a stop loss run, et cetera, et cetera. So it's nice to see big levels, support resistance based on the already limit orders that we see in the markets. So big players, they put ahead of time. So this is going to be a good support area. But right now, it's all irrelevant, to be quite honest, because we are still waiting for the cash market to open in 20 minutes. And obviously, once the cash market opens, you're going to have a huge volume inflow of orders, panic orders that couldn't execute until the cash market opens to get out of their stock positions. All right, so it's going to be interesting. So that's why right now in the last hour, we've done nothing but just consolidate because essentially traders want to see and gauge what the fuck is going to happen after the cash market open and how much flow, negative flow, it will hit the tapes and the market, whether or not we're going to have another leg down or there will be an overwhelming, or this dip will be essentially bought and considered that just FUD bullshit news. Okay. So that's what's happening. So for the stock indices, whether it's ES and Q, I think it's best to just wait till cash market open. I wouldn't trade them now already if you're not in it. Forget about it for now. I want to show you something with gold. Gold also opened gap down. Last week, as you remember, we were talking about this head and shoulders, and we were sitting at this support. But this support basically, it never got broken and never got taken out because it was already end of the week, end of the day, end of the week. This is 4 o'clock, 4 p.m. New York time on Friday. Then we gap down, we close the gap, retest, and it went short. By the way, remember when I was explaining to you when I would go long? I left this order right here overnight. It literally hit the order, got me in. I closed it right here as a scalp because it was already 10:30 at night, my time, and I just went to sleep. So I didn't hold for all of this nonsense. I did scalp it though. Nicely, and I explained to you last week as to why I'm gonna do that. Never to chase markets. Remember when markets were up here, and this is all-time high for gold. I was telling you essentially that there's not enough room to trade to the upside, and I don't want to just short it for the sake of shorting because it can blast through. It's a low probability, flip coin type of trading, and I don't do flip coin type of trading. So you have to be disciplined enough to wait for a pullback, and I did get my pullback right into my area, and look how precise it was. This was my fill in, literally right here. Got me in, and I just got out. This is a short scalp, and that's that. Also, the head and shoulders coincided exactly. Look at this, pip for pip, the neckline. This is like a textbook perfect head and shoulders executed. So, do they work all the time? No, but when you give them proper context, blah blah blah, you can actually use it and catch what you need to catch. One second. You can. It does work, as you can see here. It did work perfectly. I didn't trade, like I said, I didn't trade it to the downside. I just caught the blimp up because it was Sunday and I wanted to go to sleep. I didn't want to leave an order running because I didn't know what the fuck is going on with this Chinese bullshit. And I knew what's going on, but I didn't want to babysit the trade. All right, so this is done, and the big question is what's next. Okay, so right now it's not looking so hot. Obviously, we've broke the neckline, went down, retested it, and then got offered again, right? What would I do next? Well, if we don't take out this low, and let's take a look actually at the futures and analyze what the hell is happening. One sec. Okay, so this is a nice deep pullback. This is the last leg up. Okay, let me go. Also put this. One second. Let's let it populate. Same thing here, by the way. This is gold book map, and it's showing the order book essentially where the big orders reside, big levels. Okay, not just support resistance based on chart, but the actual orders. So there's a lot of resistance that's 2760. 1 second. A lot of orders. Next support is all the way at 56. So this is for short-term scalping, but it still helps to see where all the big boys are sitting. So as you can see, these are nice. This is resistance. This is support. This is where all the orders are sitting, and somebody just got a ran through with the stop loss here. So this is why we're going down. So some big block of orders got executed to the downside. Okay, so the immediate volume is still to the downside. Somebody's asking about funding futures, funding X futures. Funding, there's a lot of scammers trying to pose and trying to promote nonsense. So guys, if it's not from official, our official Twitter or any other accounts, don't fall for the bullshit, okay? I mean, welcome to the fucking internet. Know who you're talking to, behind every account, anyway, doesn't matter. Back in the day, back in my day, when the first days of internet, there was chat rooms, and in chat rooms, anybody who posed as a girl in the chat room, we always knew it was a dude, so kind of do your due diligence and realize that, if the account name looks similar, but it's not exactly the official one, there's no check marks, nothing, then, you're talking to some scammer. Anyway, let's get back to trading. So, yeah, you can see, these are huge orders getting executed, and this 56 support that was previously sitting, that got just liquidated. The big order got hit, okay, and they got liquidated. So let's see. This is why it's rushing to the downside. This is a nasty head and shoulders too, a little skewed, but we'll take it. This is going to be the next area of interest at 52, 53. So so somewhere right here. Okay. Let's see what happens. So if we make a lower low, This is going to be, I would, if I would want to step in today, if I would want to trade it today, just as a, I wouldn't be selling it now anymore. That train has left. What I would do is, since we already did the deep fib bounce upwards, what I would do is wait for this support, especially because this level of support coincides with, you see this line right here? That's the daily ATR. Daily ATR, meaning the average true range of the instrument, see the limit up, limit down. Basically tells me that this is the normal distance that the market travels on a typical day in the last 14 trading sessions, okay? And usually once it reaches these levels, it's kind of runs out of steam. So if you're gonna do counter trend trading, and I do like this counter trend setup here, I would, for a scalp only, I would just wait for this to crush this, then pick some up right here. Would probably go retest this breakdown, and maybe then continue south. But I would catch it, buy it here, probably get out right here. If I see it roll over, then I can hop on the short and basically trade both long and shorts at the same time. You should always be patient though and not trade against the trend. So the trend was still up. 1 second, getting a phone call. All right, so yeah, this would be my type of trading if I would want to step in. Again, don't just leave an order here. Use a, since if you're trading futures, use the futures volume footprint so you can see what the hell is happening at those levels. Okay, you want to spot, first of all, you want to see the cumulative delta and the volume change to the upside, okay, at the level of interest. So as we're hitting up certain levels, you want to see a turnaround. Right now, you can see that the price, 1 second, let me just zoom in. Make it visible. There we go. We're still, this is the sell-off. And let's go to a 15-minute. Basically, I want at least one. You see that every single candle that the high is never taken out. So with pretty much, except this little feeble attempt, but didn't have enough juice to take this out. But the deltas are still negative, right? So we're still running. The buyers do come in. There are wicks happening at the support level. But I want to see a follow through. So this needs to end. I need to see positive delta candle develop and close above previous candles high. That's when I can step in, put my stop loss below, and I can scalp it to the top for scalps and longs. Okay, this is strictly day trading. I want to keep it overnight. This is exhaustion type of trade. Type of environment. Okay, so if I'm interested in buying, this is how I would buy. I wouldn't just leave an order and buy blindly. But like I said, I would wait for lower pricing first before I even think about it. So right here, this would be my around the 44 level. Let's see what's happening at 44. Is there anything happening? I'm just trying to see what's going on in the order books now. So there's not even the big interest is right here at the 50, whatever this level is, 55 level. Huge orders is sitting. All right, so for now, that's the big demand zone. So sellers are sitting at the 60 even, and buyers are sitting at 55, 54. All right, and the price is still oscillating. Like I said, even with gold right now, see. This candle is now pushing to the low side. So that's why you don't pick if you're going to pick the bottom, make sure you pick the bottom in a more intelligent way, right? So, and futures offer you that by providing you inside peek as to volume, orders, and how everything is panning out, okay? Not just candles. candles alone are fine. So like I've explained to you guys, how do I, somebody actually asked me on Discord, so I'm going to mention I've talked about it last week, but let's revisit it. How do you do technical, how do you even analyze the market, right? So first of all, you go on a higher time frame. You go on something like weekly chart. You can see that the gold has been in the huge uptrend, okay? Obviously, with all the money printing, inflationary, gold is gold, right? It's been around for thousands of years. It ain't going nowhere. It's still money. It will be money. It will be a commodity that is desirable. So, and it is an inflation hedge type of commodity. Anyway, instrument. As we approach the all-time high, we're seeing signs of early reversal. Quite possibly you can roll over, fine. But let's, again, you mark huge, big levels. So right now, this is the all-time high, so I marked the all-time high, okay? This was a big resistance level, and now what's happening, we've broken this resistance level, and all we're doing right now is retesting it. So a lot of breakouts, as I've pointed and mentioned ad nauseum, usually breakouts lead to a retest and continuation. So right now we're getting that retest, which suckers in usually unprofessional traders, not unprofessional, professional traders who are dumb. Basically, the reason the market has to create an illusion that, oh, this is the top, let me hop in, and then it turns around on them and fucks them in the ass. All right. So that's a very technical term on Wall Street. So right now it does look bearish. It might even go down a little further. But again, you want to trade with the trend because markets move in waves, you know, up, down, up, down, up, down, blah, 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 right? The trend is up. You never want to piss against the trend unless you're a professional trader and you know what the hell you're doing. Then, well, you wouldn't be even listening to this if you were, right? Well, maybe some of you are. But I'm talking about with decades of experience. So it's easier to make money with the flow. Imagine you're swimming in a river. Would you want to swim against the flow or with the flow? Obviously, it's a lot easier to swim with the flow than against the current, correct? So same thing with the markets. Why piss against the wind when it's easier to just make money when wind is in your back, so to speak, right? So same thing here. So for now, we still had the uptrend intact. This is going to be the change of structure is going to occur when we take out this low. So you have to be patient. Doesn't mean you don't need to even buy here. You can just, again, you don't leave an order here unless we take this out. The uptrend is still intact because when this thing happened, right, and people were trying to short right here. Oh, this is it. This is the top. This is blah 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 blah. And then the market goes up, and then the market goes up. And this thing can easily dwindle down here and then turn around and retest all-time highs. So that's why, and it'll be a lot easier because it's going to be swift, it's going to be quick, and it's going to be without fucking pullbacks. So you can actually sit in your, like here, you can sit in these positions and it not freak out, or because you can, they move fast into one direction, so you can actually keep it alive and keep your profits, okay? Meaning you can run it until it exhausts itself without being scared. So you can capture the majority, 80% of the leg up. You're never going to be here and here. I mean, sometimes it happens. But your job as a trader is to capture 80%. So here to here. If you've captured this much of the of this whole move of this leg up, you're a 5% top trader. All right. So and this was downtrend, so local small downtrend, right? And then we've taken out this resistance, and off we went to the races, right? Market shift and trend shift. And on the 1 hour time frame, it was quite visible as to we take where's this right here, market shift, structure shift, retest of the breakout, continuation, another higher. We started making higher highs and higher lows. If we're making higher highs and higher lows, even if you've entered right here, somewhere around this level, or on this pullback to this level right here, and then exited stupidly at the previous leg high at the resistance here, right here, for example, you've captured a good chunk of the move, okay? That's how you trade with the direction of the trend. You always look, first of all, at the direction of the trend overall. Why are you going to piss against the wind if all institutional players are buying this shit? Who the fuck are you to piss against that wind? You don't have the firepower or nor the knowledge to do that. It's stupid. It's a waste of, again, wow. It's like competing against, everybody swims downstream and you're the only jackass swimming upstream thinking you're going to, on a 100-meter dash, you're going to actually win time-wise. No, it's impossible, okay? You're never going to beat somebody who's uncomplicates their life by trading with the trend. So always look at the long-term trend on weekly, daily time frames, and then drill down to 4 hour, 1 hour to start seeing opportunities. And how do you spot opportunities? You spot opportunities at the areas of interest, all right? And not only one area of interest, but if it's a confluence of the reason why I left an order here overnight was because this was a previous area of interest. I've discussed it again ad nauseum. This was as you can see, 4 hour order block. As if let's use the ICT. 1 second. Smart money concept bullshit, or this is previous area down candle, and it coincides with the 618 to 786 deep pullback. So this is you can see that the way this price has been moving every single time. You can draw fibs here, right? There was a deep pullback every single time. It likes this 618 786. Boom, one leg. Let's fib it again. Cash market open. 1 second. I'll make it lighter so you can see the zone again. Boom. So it hit it here. It hit it here. Blah blah blah. If you keep going up, quite almost didn't get it, but you can see that it retested previous resistance turned support. Okay. All right. So let's do here. Also didn't get here, but it did get here. Again, I would have caught these two. I've actually been trading all of along for the last week, but if you're just trading this setup, as whenever it approaches this golden zone, the 618, 786 zone, you can start looking for turnarounds, and it did exactly. So that's why I left an order overnight here, and it did exactly that. So in this case, it worked out perfectly. It hit the 618 to 786 zone, which coincided with previous resistance, now turned support. So that's why there was a bounce. Buyers came in. Didn't last, but it lasts long enough for you to make money, for me to make money. Okay. Now we are through the bottom. You can see the huge drop in towards the sellers dominating the market. Somebody, a big order just got executed. Somebody just got stopped out, liquidated right here because their stop losses were here. So somebody who was long just got popped, okay? Literally got popped in this chart right here. All right, so, and the reason for that is because it was cash market open on the stock market, okay? Stocks just opened and huge volume of orders hit the market. So there was obviously a huge order for gold, and that's why you don't trade. If you're not in these certain trades, you should wait. You shouldn't enter 5-10 minutes prior to cash market open, because you're gonna have a huge influx of volume, cash market volume, that, and you can see the volume, if you can see right here, this is the volume overnight. This is volume early, early on, and this is the volume right now. Okay, you can see that this volume, immediate pop in volume, and this is what happens because of 9:30 cash market open. So you have to be aware on the time frames you're on, meaning where you are in the day. You know, because markets and traders, they go through waves of trading as well. So there's going to be a lot of activity at 9:30 to 10 to 11. 12 to 1 is when it gets slow. It's lunch hour, right? So you should probably stay the fuck away. At 1 p.m., you can see spike in volume again. So if you're day trading, if you're scalping, know when it's liquid, when it's not liquid, when there's a probability that there's movement is going to be legitimate, versus when it's bullshit. When, for example, again, if it's a few minutes prior to the open, you probably should stay away. Number one, when it's lunch hour, stay the fuck away. 100% from 12 to 1 is a no-go zone. Just do yourself a favor and stay the fuck out of that. I'm talking about New York time. All right, and then you can see the volume spike at 1 p.m. And you can see that it starts trending on a shorter term after 1 p.m. And you can jump on that trend if you want to, because that usually can ride into the pretty much 3:30. And then you have profit taking, and the market usually turns around again, et cetera, et cetera, et cetera. So know what time of the day it is, and you have to know and understand how markets move at different times of day. So don't be, just because there's a setup, it's all context, you know. Just because there's, most people kind of like they learn technical analysis, and if this is head and shoulders, so I'm just gonna keep on trading head and shoulders, and then they lose money, because it's not just head and shoulders, it's the context of head and shoulders, where it is on the long-term time frame, where it is during what time of day it is, et cetera, et cetera, et cetera. It all adds to it, or this is why you're not an algorithm, you're a discretionary trader. You have to use your discretion in order for you to make money and avoid. It's not only when to put on a trade, it's more so when not to put on a trade, because an algorithm that is programmed to take head and shoulders will take every single head and shoulder, even though it doesn't know that the World War III started and this shit is tanking, for example, right? It doesn't know, it doesn't care. But you, as a trader, you can use your discretion and say, oh shit, China just dropped a nuke on Taiwan. Fuck, this is not a good time for, buying some kind of asset, correct? Correct. Anyway, so this is NASDAQ. We're still trying to recover. We're hitting up the dynamic area of support resistance, in this case, resistance of value area for, as you can see, I don't know if you can see, but this moving average cloud. So we're having trouble penetrating 21 EMA right now, and it's quite telling. Again, you can watch the volume, you can watch the moving averages, you can look at moon cycles, whatever floats your boat. You're basically, as a new trader, you have to take a look at all the possible options that you can that you find interesting, and then see what sticks for your personality, for your type of trading. So combination of moving averages, price action is what I like. I like deep fib pullbacks into the direction of the trend, against the trend to get into the direction of the trend to enter the trades. Again, big tenets. Always look at the higher time frames, weekly, daily, must. Always mark big levels on these charts, and this will give you clues as to because why do you have to look at the longer term time frame? Well, because big institutional players, they're not sitting there on a 1 minute chart and jerking off with billions of dollars of orders. Okay, you can't. There's no liquidity for it. So they mainly trade from a daily chart. Okay, daily, maybe 4 hour for pinpoint. Blah blah blah. But a lot of big traders, they're gonna look at the daily, and that's why when you see big daily levels, this is when you trade. This is when you want to trade with the big boys. Okay, So big levels provide high probability setups, essentially. So look at this uptrend in gold, for example. This was previous high, breakout, retest, retest, boom. Previous high, breakout, retest, boom. Previous high, breakers, ad nauseum. And then obviously the previous high, there is a little bit of attempt, and then down. Obviously, trend changes at some point. But big levels, as you can see, big fucking levels always provide some area of interest. And again, it doesn't mean it's going to work every single time. It's not as easy, blah, blah, blah. But again, looky here. Again, previous resistance turn support. You can see that this candle probed lows, but it didn't close below the low, right? Jump and went up. Same thing previous, again. Resistance, breakout, support, retest, boom. So if we go on a 4-hour time frame now, let's take a look at what's happening. So again, this is a previous huge area of interest. Okay, there was a lot of volume, a lot of traders duking it out until it broke out of it. All right. So now we are doing the same stupid breakout and a retest with a possible continuation. That's why if I want to, it's a little scary right now because of the geopolitical macro news. However, the trend is up. I would, like I said, personally, I would want to enter somewhere around here, but around the ATR area, the area where usually the movement stops. But so far, it looks like we've ran huge stops right here. And now we're trying to bounce a little bit. And big orders, buy orders are coming in. So we've essentially manipulated the market enough to run the stop losses for people who were long here, thinking that we're going to go here. And this is why sometimes you have to take partial profits or close positions early, okay? Because people who thought that, oh, this is the leg up, this is the deep pullback, and we're going back for another high, and they simply left their stop losses below these lows here. Okay, let's say they entered it here or somewhere above this candle, right? So their stop loss was here, and they're running this, and they're trying to get to the top. Take partial off, put it at break even. So you would have taken a half off, break even stop loss here, right? And instead, some actually got greedy, and this is their stop losses were below this low, and this is what happened to them. They got popped because we saw a bunch of big orders sitting right there. Market makers push the price down, and then they take profit once they got your fucking stop. Not your retail puny fucking stop losses. I'm talking about it's big boys duking it out, right? But they pushed the price down. The stop loss city, Warrens got stopped out, and now the market makers are turning market back around. Okay, it can continue lower, but for now, they have taken profit. Okay, this is why you're getting this wick candle. And if you're gonna see a wick candle like this, then once it takes out this top and it's confirmed on the volume, on the footprint charts, I can go long. So if we're gonna take out, I'll put my stop here, or even probably here would be ideal, and I can scalp to. Now I'm gonna catch this top. Okay. But I already made money today on NASDAQ and on gold prior to even on Sunday open. So I'm not in a rush. It's trading is like hunting. You have to wait and be patient. You don't go into the forest with a rifle and start shooting in every fucking direction like a dickhead, right? You're not gonna kill much, if at all anything. But if you stay in one spot, you wait. The animal comes to you. That's when you take a shot and you do the kill shot. Same thing here. I'm not advocating hunting or anything like that. Just to give you an analogy. All right. So this is why you have to be patient. There's no rush. I've taken thousands, tens of thousands, if not hundreds of thousands of trades. I don't even know at this point. Enough to know that the next opportunity will arrive. There's always tomorrow in markets. Okay, markets are not gonna stop. there will be another opportunity. So don't force your view, don't impose your will onto the market, because you can't. Market is 100% winner against all the people who try to impose their uh, uh, um, little views on, just because you wish that, that doesn't mean shit, right? So let the market come to you. Stop forcing trades. Forcing trades leads to over trading, and over trading obviously leads to losses, and you taking subpar setups that lead to disastrous results. And one of the biggest tricks to avoid over trading is journaling. When you journal your trades, the reason for the entry, I take snapshots of every trade I take. I take a snapshot before. Why am I taking this trade? What are my stop loss? What are my take profit potential levels? I don't have to have a hard stop loss. Sometimes I don't. Sometimes I do. But I know I will exit it manually if I need to. I'm not going to be just letting it run, because I've done that and you've done that, and we all know that 80-90% of the time it will come back and you might save. But there'll be one time that it's just going to keep going and going and going, and you're going to blow the fucking account. So have a stop loss. You don't have to have a hard stop loss like these people right here. They had a hard stop loss. You can have a closing on the closing basis stop loss, meaning you want to price first, even if it penetrates the stop loss level. You want to see the candle actually close in that below that area. So sometimes, obviously, it can keep on going, and by the time you're waiting, you might have to take a bigger loss. That's fine. But a lot of times, especially for novice, their stop losses are so fucking obvious where they are. Not only for novice traders, for professional traders as well, because they read the same stupid books. All right, it's the same technical analysis. Everybody knows. And then you have this level 2 data where you see the books and you see where the big orders are. And the market makers see where the big orders are. So they can push towards one way or another in order to force the liquidation of these weaker hands. Okay? And that's the name of the game, because in order for you to make money in trading, somebody has to be on the other side of that trade. And both of you think that you're right. Both of you are geniuses. Well, the beauty about market, it will immediately give feedback who is a fucking dipshit and who is not, okay? And you cannot be a genius all the fucking time. So before you start, thinking one way or another, it's if you're right 60% of the time, 70% of the time, you can make money, okay? You can make money even being right 30% of the time if you have a risk to reward. So you lose 70% of the time, but your risk to reward is 1 to 3, 1 to 4. So for every dollar you risk, you'll make $3-4. That's fine. You're gonna be profitable. The problem with again, for novice traders is very simple. We are taught in schools that you should not be wrong. You should not be wrong. You should always correct answer. If you're wrong, you're stupid. If you're wrong, you're stupid. And all this programming, all this stupid fucking retarded programming that we get from industrial age educational system, which was producing factory workers with the fucking bell and the lunch hour and the whatever, the fucking circle jerk bullshit, right? It was for you to work at the factory, at the Ford Motor Company. When the little whistle goes off, you go to work. When the whistle stops, kind of like in your classrooms, right? When the period starts, when the class starts, little bell rang. When they finished, it's just programming you to be a fucking slave. Never make a mistake. Never make a mistake. Why? Well, because if you make a mistake on a Ford Motor fucking factory floor, you're gonna produce a shitty part, which will cost them money. Do you understand? But if you're a businessman, not making mistakes will make you fucking paralyzed, because if you're afraid to make mistakes, the most successful businessmen are the ones who make a shit ton of mistakes so they can get to the shit that works. Same thing with trading. Your job is to take thousands of trades, and from that thousands of errors, of headache, of tears, of blood, of making you crawl into bed and feel like a bitch, you will develop your system. It takes 1 to 2 to 3 years to do that, though. All right? And the reason why it takes so long is not only the technical. You can go read a thousand systems that work. It's your mentality that you need to deprogram the garbage out and install a new software, a new way of thinking, and be okay with taking a loss. Because most novice traders are dead fucking scared to take a loss. Oh my god, I'm wrong, I'm stupid, like a monkey, and we are all programmed monkeys, unfortunately. But that's why the powers that instill this and put this into educational system in place, they don't need you to be on top with them. They need you to be down there sucking dick, So, to put it bluntly, you want to get your dick sucked, or you want to be the dick sucker, So it takes two different mentalities, two different fucking ways of thinking about life. Okay, so that's why it takes a little time to go from one to another. Okay. Anyway, my little off tangent talk. Let's see. Oh fuck. Let's see. And the gold again. See, it's having trouble. It popped the stops, and now it's in the limbo. Are we gonna close? That's why you have to wait. Wait for the candle to close. I don't know if the buyers or sellers are gonna win in this, because you can see that the buyers are taking it up. Now we're still in a negative CVD, cumulative volume delta, meaning there are more sellers than buyers still. So it's you don't want to just blindly step in and play catch the falling knife. The knife with the gravity is falling on your head, and you're doing this like a retard. You don't want to play that game. If you want to play that game, mean reversion or buy the dip, wait for a little confirmation. It will save you a lot of fucking agony, a lot of tears, a lot of disappointment if you just simply sit and wait for this hourly candle to close. But most people they FOMO in, they have FOMO, and they're like, oh my God, this market, if I don't buy now, this thing is gonna run away. And what am I gonna do? I missed the opportunity. Right, and that's the whole, and that's okay if it runs away from you, because there's gonna be another trade in an hour, in 2 hours, in a day or two, whatever. But promise you, there will be another opportunity. But there isn't a lack of opportunities of you to make mistakes and get caught and fucking take stop losses or blow up your accounts, though. So your job is primarily not to enter shitty trades. Once you avoid eating cheeseburgers from McDonald's as your sole fucking dietary intake, and instead concentrating on eating steaks, you will transform everything. All right. So wait for this candle to close, and this is why it gets a little lonely. It gets a little slow, so to speak. It's hard to sit on your hands like this and just wait and do nothing, because you're all about excitement. This is I call it the paradox of Wall Street. So Wall Street, or trading in general, attracts people with gambling types of personalities for the most part. We all have that gambler inside us, but until you kill the motherfucking gambler inside you, you will not be profitable. Okay? Because I'm sitting at this, and I have zero excitement or anything. It's just price to me now. I don't have this. Oh my God, I'm gonna miss something, and just blindly enter trades for no fucking reason. I'm gonna wait. This does nothing to me. So, and until you kill that gambler, where it's like spin the wheel on a Saturday night in the fucking Las Vegas type of mentality, you're not gonna be making money. This has to be. Trading is a boring sport, unfortunately. That's why it's a paradox. That's why I call it paradox of Wall Street, where all the gamblers get attracted to it, but until it becomes stupidly boring to you. Not boring that you're not completely interested, but boring in the sense where you're not throwing dice. This is not a fucking corner where you throw dice or you go or spin the roulette fucking wheel. You have to stay just impartially and indifferent. I'm completely indifferent right now towards this price action. Completely don't give a shit if it goes down, up, sideways. up my ass, not my whatever the fuck. Don't give a shit. What I care about is how this candle closes and how the next candle will present itself, and if I can find an opportunity then. Until I see some confirmation, you can do whatever the fuck you can run this way, that way. I don't care. I just don't care, because if you're gonna be in your gambling state, you're heightened emotional, like a little puppy dog that chases a ball. I throw a ball, the market makers, they throw little balls at you. You're like a fucking crackhead chasing these balls around. Meanwhile, the market maker is the one who's throwing the balls and making all the money, right? You're just generating fees. That's all you are. You're doing. So stop generating. Stop being a generator of fees, and start actually make money. And to make money, it has to just you have to be indifferent and cool and calm under pressure. Not pressure, but you shouldn't have heightened emotional states. You're not in Vegas. This is not a Saturday night with a couple of drinks in. This is not it. You have to be just calm, collected, and look at this as just simple things that either set up or don't set up. If they set up, you do this. If they don't set up, you do nothing. Okay, and the way you learned all this, either by listening to me, or better, what's gonna happen would happen to me and everybody else. The market will beat this shit out of you first until you're like, okay, fine, you know. So that's why, again, it takes 1 to 2, 3 years, because you're gonna think I'm talking shit or whatever you're thinking. You think you're the smartest, you're the new whatever greatest trader since sliced bread, and these things don't apply to you. But trust me, market will beat the fucking shit out of you. It beats the shit out of everybody. That's the whole thing about a market. It's a very fair mechanism, meaning it doesn't care you're black, white, girl, boy, smart, completely fucking retarded. It doesn't give a shit as long as you make money or you lose money. That's all it is. So, and this is how it teaches you. It's gonna beat the shit out of you until you submit and become smarter about it. Anyway, we got 6 minutes for the hourly candles to close. So I'm still waiting, obviously, to see how this thing plays out. Let's see what's happening with the markets. You can see on my screen, when I have these red candles on my screen, it's my algo basically telling me that this is becoming grossly oversold. So pay attention. Once you're gonna start seeing a turnaround, go long if you want to piss against the wind. Again, I can piss against the wind because I've taught myself how to piss against the wind through experience and through taking thousands and thousands and thousands of trades against the wind. And again, this is not my number one way of making money. This is pissing against the wind should be your once a good opportunity kind of presents itself. It shouldn't be a rule. It should be an exception, but a good exception. Okay. Right, so it's a lot easier to not to piss against the wind. It's a lot easier to ride with the flow. Give me 1 second. Let me check the only. Okay, I'm in profit. Hold on, let me take this off a little. Shit, where's my order? I have 4 contracts on. Let me take a little. I want to take a little off. Partials are, 1 sec. Okay. Okay. There we go. Now we're getting this rally going. Sorry, I had to do my thing. I was riding a big position, well, not decent enough position, but needed to get out, take some off the table. Now I have one runner. I think we're gonna close this gap at some point, and if it doesn't, it doesn't. So I'll just close the last piece at break even, and if it runs, I'll make even more money. Okay. I'm given the context of the day, it's still quite risky. The markets are not far away from all-time highs, so we can easily do this in the next few months. Okay, so I don't want to be just playing pick the bottom and endlessly hold it. You have to again be nimble. The point is to make money, not to have your ego be so greedy that you are just again. Everybody has their own style of trading. Everybody has their own mentality. We're all different people. I prefer to close something. I don't like when winners turn into losers. Okay, and so I take off the top, and I leave a half off or one fourth off on as a runner because it might go to all time highs, and I can just keep on let it fucking run, and that little runner will make me a shit ton of money. But the bulk, big chunk of money, as a day trade, I already made, so I'm happy. My day is done. It's 10 a.m. My day is done. Okay, yeah, that's all it is. But obviously, I'm not done yet. But I can finish this day. I can go fuck off and do some whatever I want to do. I don't even need to do anything because now I secured the profit. I'm Gucci, as they say, and I can take the now. There's no pressure on me at all. Okay. All right, let's see the internals. So this daily candle is becoming, if this thing becomes it closes this gap on a day and it closes like that with a big huge wick. That means a lot of buyers are coming in, and this was a dip. This thing is gonna just rally afterwards. If that's the case, that means that the market absorbed all the weak hands who shed their pants with some bullshit Chinese news that came out of nowhere, and the market will just basically shook out with the FUD, with the bullshit news that it's market is here to fuck the stupid people out of their money. Okay, that's all it does. It fucks stupid people out of their money. So it has to create scenarios for that to happen because we're all smart, right? So how's it gonna trick us into? So if the price action creates these, again, it's traders behind the price action, but to make it to make the point, the situations have to be created that start pushing on your emotional centers. Oh my god! Oh my god! The Chinese with their fucking with the AI nonsense. Let me get out of my orders, get out of my positions, get out of my position. While smart money is absorbing all that bullshit, they know it's bullshit, and they're writing this whole thing out. But they needed to create this FUD in order for you to get to forego of your assets. How many people own the Bitcoin at 10,000 or 20 or 30 or 40 or 50? And how many of them still have that one Bitcoin from fucking 5 years ago? Pretty much nobody, right? So you have to the markets create these opportunities, these ebbs and flows for the smart money to get the money, and for you to be either placed in a wrong position or forgo of your right position too soon. Okay. Anyway, so all right, I've been yapping for an hour. Let me see what's happening. Dollar index is mustering a comeback a little bit. And this is not a futures, this is CFD. Fuck it. Let's take a look at the euro. So the euro has been obviously selling off again from the area of interest. It didn't even get that high, but starts reversed around the area prior to. Anyway, so right now, the next level that I'm watching is this level, as you can clearly see. Again, marked on a daily. I see that there was a lot of, this was previous swing low, swing high, right? So when we've first day we've kind of retraced, and we tried, bias came in, broke it down, retraced, retest, continuation, another retest, another continuation. So clearly this area is a very significant area, and I want to see what kind of reaction we get. If we start rolling over around this area, I will join the trend to the downside, okay? And until we have on closing basis, we take out this high. I would be looking for shorts here around this area. If we close above this, then I will be looking to buy dips. That's simple. Well, I can leave it here. All right. Ooh, nasty, nasty. So now, again, same thing like in euro. This is the previous area of interest. Let's see how we, if we pause, what happens around this. This is going to be my next area of interest. I want to see if we do, this was the breakout. This is a retest for another leg up. So we can take these fibs that I don't need anymore from today because they've served their purpose. I'm going to drag this whole leg to see where we are, or at least I could, well, this is as you can see, this is the full leg up if you're looking at the weekly, but on the daily, this was the last candle down, and this looks like this is the last leg. So again, 618, 702, or the midpoint of 786 and 618 fib with a confluence of this previous area of resistance that possibly can turn support. So now you have the fibs, you have the area of support, you have this fucking order block here, blah, 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 blah. As price approaches here, I want to see signs of a turnaround. I'm looking at the daily. I marked this level on the daily. But I'm going to be looking for signs of turnaround on a 4-hour, 1-hour time frames and lower. All right? So this price is going down now. Okay, so let it go down. I don't give a shit. I could run, like I told you before, because this is a short, if this is the last leg up. I might start seeing, this is the daily ATR, if we start exhibiting some signs of pause and turnaround around this area. As a day trade, I'll be trading it for an hour or two max, right? But right now, you can see the right here. You can see that the sellers are completely dominating the shit out of the buyers. So until buyers are gonna start stepping in, why am I gonna? Who am I to just stand there with? There's a boulder falling on my head, and I'm trying to be. There's a whole mountain falling on my head, rather, not even a boulder, a mountain. And you're going to be like, oh, look at me, I'm going to prop it up. No, it's going to crush you. It's going to go through you like butter, not even butter, whatever. You're not even butter in this scenario. That's how bad it is, right? So why am I going to be stepping in for no reason while I can step in when it's when other big boys, institutional hedge funds, when they step in with billions and billions of dollars, that's when I want to step in, because I'm going to be riding that wave with them. I don't want to be the first one. I don't have the firepower to be the first one. So your job is to identify the opportunity at the areas of interest. Once you start seeing confirmations of turnaround, that's when you could take your trade. Again, that's my style of trading. This is what I found that works for me. All right. As an addition for gold, you want to watch the US dollar. Okay? Because gold, see, the dollar is turning around, but it's literally retesting this previous. Let's do this. This is how I mark my areas. Whatever, green. So this was previous low, right? So if we are basically we broke down, we could possibly just be retesting to a turnaround. So knowing that gold moves usually the opposite of dollar moves the opposite of gold usually. I want to see if this thing turns around and gold starts, buyers are coming in and the volume is changing, showing me that the buyers are stepping in on gold. That's when okay, fine, I'll join you as a scalp for a day, okay, as a day trade. That's because now you're looking at correlated markets, at not correlated markets, but all markets now correlated to be quite honest. But you're looking at different instruments confirming that the move is legit, that it's happening in everywhere that it should happen, not discombobulated. What's discombobulated? For example, you want to buy stocks. Nasdaq is going up, S&P is flat, US 30, Dow Jones is going down, or some combination of that. That's not when you want to long stocks. You want to long stocks when all three are going up. S&P, Dow, Nasdaq, they're all going up. Yeah, that's the fucking time to go out for to buy, because every market is confirming each other. When it's not confirming each other, it gets a little trickier, right? You can still take the trade, but the probability of that trade is much lower now. All right, so you have to really know your trading, your whatever that you trade, however you trade, that you have to back test it and see out of 1,000 trades in the disconnected market, were you making money or not using your system, right? But when everything is congruent, it's a lot easier. Again, it's a lot easier, and it adds a layer of confirmation, higher probability of you succeeding. All right. And looks like we're running out of steam. By the way, the reason why, this was sometimes during huge news, we have two standard deviation moves. So this was the ATR, and we essentially did double the ATR. The more we make, the farther away we move from, if we do two standard deviation move in one day. Again, the news were bad, but nothing earth shattering. Okay, so buy the dip at good levels makes sense. What's a good level? Again, all right. So we go on a daily. This is the last leg up. This is the fib 786. All right, we literally went down here in one huge move, right? So on bullshit news, and this was a good area to buy, so I did. And yeah, that's all she wrote. One sec. Let me see. All right. All right, guys. I've yapped enough. Oh, this is way too much. Too much. I really appreciate you guys writing a lot of stuff, but I can't read all of it, unfortunately. So somebody is asking about the risk to reward. No, I do 1-to-1 risk to reward often. Okay, I start as 1-to-2, but because I take partial, it comes out to 1-to-1. But I'm right 80% of the time, so it works for me. So that's my because I pick only conservative when it's already like, it's like an animal came to me and put the head against the fucking gun and press the trigger with their hooves. That's how I like to trade. I like super high probability when markets are exhausted. When like in a move like this where it's like super overstretched, then it's just you stack probabilities for you. So I get to my strategies work 70 to 80% of the time that in my particular way. Very rarely they run 1-to-2, 1-to-3. I never leave them like that. I just I cut them at one. They usually comes out to 1-to-1, and I'm fine with it. Okay, that's because I like to. Some people, again, and that's my mentality. It's just years, decades of me understanding who the fuck I am. Some people are okay. For example, being 30% of the time and leaving 1-to-4 trade. Okay, 1-to-4 risk to reward. 1-to-4, 1-to-3. 1-to-10. Well, these fucking YouTubers, bullshit artists, trust me. No, not a single long-term trader does 1-to-10 as a day trade. Okay, that's bullshit. With the 2 pip stop loss and then fuck off. Anyway, all a lot of good, decent traders, specifically day traders. I'm not talking about stocks where you buy and you hold it for 6 months. I'm talking about the trading. 1 to 1 is plenty. Trust me, it's hard enough. It's hard enough, and it does the job. So I like to take partials, which satisfies my inner monkey that says you have to be right, you have to be right, you have to be right. So he's like, I throw him a fucking bone. Says, shut the fuck up. Here's the fucking sandwich. Shut the fuck up. And then while he eats the sandwich, he'll let the rest of the position run. It usually comes out to 1 to 1, 1 to 2 max, whatever. I don't hold. I'm out of the market because I also don't want to be in the market for way too long. If I'm day trading or trading, the more you are sitting in the market, the more something can throw a monkey wrench into the whole fucking situation. You know, you're a long. It's winning, winning, winning. Somebody comes, some Federal Reserve official or president of some country or some whatever. Somebody comes out and says something fucking, and the whole thing just bam turns around and poof goes your fucking profit. And you've been sitting for 3-4 days in the fucking position. Okay. Again, I'm not talking about stock trading. Stock trading is something different. I'm talking about futures, forex. You don't want to be. I just don't have the personality to. I like to satisfy my, like I said, inner monkey quickly. So it's in a corner eating a fucking sandwich. Meanwhile, the rest of the position runs. It does its job. Then at the end of the day or at night or whatever, I can close, and I don't need to think about this. I don't need to be, playing tennis and fucking checking my phone obsessively because somebody can say something and the whole market turns around and you're riding this huge position without taking any partial profits or just decide. So you either make it or break it type of deal. And I just, again, out of tens of thousands of trades I've taken, this is what works for me. For some people, it's completely opposite. They're okay, make it or break it. I'll leave the profit, no context. Whatever happens, happens. I'm not like that. I think I have a fucking brain, and if I see picture changing, why the fuck am I just gonna leave that trade on like a fucking retard? All right. And sometimes you're just not gonna, because it's a 24-hour market. Sometimes you're just sleeping. Sometimes you're doing life, right? You're in the gym. You're taking a walk. You're eating, doing something. You have life. You cannot be glued to the monitor for 24 hours a day. Even though as a young man I was glued to the monitor, but I don't want to have that lifestyle anymore. It's very I don't need to have that lifestyle. So that's why I would rather I will take myself out of the market, or I will leave the position at break even, the last piece. So that way I have the zero headache. If it stops out, I already made a huge chunk of money with my partials. And if it keeps running, great. If it stops out at break even, fuck it, I made money. And this way I can live a life relatively stress free, because this is a stressful way of making money. And after 20 years of doing this, I kind of just learned how to manage it correctly for myself, for my lifestyle. All right. My thoughts on fib levels. Yeah, this is not on Discord, because when I run Discord, I can't show you 4 different screens on Discord properly arranged and everything. It just I have 49-inch monitor. It's so big that if I just run a full screen, and I have a bunch of screens too, but if I run the 49-inch monitor on Discord, and you're gonna be looking at your laptop, you'll have to have binoculars to spot anything that I'm doing on the screen. Okay, you'll have to have a lens. So it's Discord also is highly unoptimized piece of shit software that chokes. Anyway, so we're doing just YouTube for now. All right, fib levels. Like I said, I like the area between 618, the golden fib, and 786. So this is the 786 is I call it the banker's pullback. Okay, so deep pullback. So any area between 618 and 786 is where I like to get into positions, usually on the dips. Sometimes, again, I get in at 50% or 38%, depending on the context on the day, what's happening. By the way, look at gold. Do you see that we started changing the picture? Let's take a look at what's happening. Are we bouncing a little bit? See, look at that. Look at that. Look at this. It hit the ATR, the daily limit that it usually travels, and you immediately saw a profit taking. Why? Well, because algos are watching this. This is confirmed immediately by the volume. We went positive. So because the market makers who ran these positions down, took immediate profit. That's why you have this bounce again. And is it going to stop here? I don't know, but you can the algos and the market makers running the algos seem to think that this is enough for today, and this is a good area for them to at least take some profit off the table. People who ran these shorts. So if you want to play kind of trend, this is maybe a small. It's okay to start nibbling a little bit. Again, by the way, when you trade kind of trend, always trade smaller. Okay, don't, because it's easier to add to the position if you want to get out of break even. For example, let's say what if I'm all right? How about this? If I'm gonna run longs today on gold, this is I would want to see these. Oops, fuck this. So this is the low. Ideally, I would want to see market makers run the low, because this is where the stop losses are, and then that's when I would want to go against the trend already, because then they would probably run the longs, liquidate, and that's when they also will start taking profit, and then you can catch that swing up. It can also stop right here, and I'm fine with it. But if you want to be conservative, let the stop loss run first. How many of you have been praying to trading gods? Every single one of us, okay? Every single one of us had the time where your stop loss was somewhere below some kind of level. You see the price approach to it. You're like, Jesus, Buddha, and Allah all combined. I will blah, 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 blah. I'll never do this again as long as you let the price turn around. And sometimes price turns around. Like, it can turn around here and go up. Fine. But I'd rather have them. This will be a much safer bet. If they run the stops, the motherfuckers are satisfied. They had their kill, so to speak, right? And that's when they can take profit, and you can ride that counter trend by a long position, counter trend, long position to counter trend to today's type of price action. I mean, right? Long term is still long, still bullish. But this is how I would do it. In fact, if you want to increase your chances on making money, what a good experiment will be this. Next time you want to enter into position, know where your stop loss, know where your stop loss, know where you're gonna take profit, and instead of entering where you want to enter where your stop loss is. You'll be surprised the amount of time that when it starts working out, because if you place your stop loss there and you constantly lose money, the market makers know that. So just be a market maker. Make money on your own stupidity. Brilliant. You put your entry where your stop loss is, done. Instantly, you will be 50% more profitable. Guaranteed. All right. Anyway, on that positive note, I want to thank everyone. Stop by our Discord, our Telegram. You can find all the bullshit in the description. I'm doing this again tomorrow, and again tomorrow, and again tomorrow. So come say hi, visit us. Again, fundingfutures.com if you want to take advantage of the futures markets, or if you want to trade Forex, CFDs, fundingtraders.com. All right. It was my pleasure. Thank you so much. I will see you all tomorrow. Be safe. Don't be, again, markets are super volatile. So with these news, let the market settle in a little bit to provide more context as to what the hell is happening. Right now, you probably better off just chilling. Um, like I said, with the indices at least. With gold, wait for that stop loss run. Once you see the stop loss run, that's when I would enter. Okay. All right, guys. Cheerios.